Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. This is portfolio update number 219. And like I do every single Monday morning, I deposit $100 into this account and I buy more shares of dividend paying stocks. But today's a little bit different. And what I'm doing is I've deposited $250. So rather than do 2 weekly buys, I'm going to compress it into one Monday buy and increase the buy to $250. So we'll see the moves kind of go up a little bit more than in the past. So the incremental difference will go up a little bit higher as well, but there'll be less updates as well. And the reason is it's really I have just less and less time, and I'd like to actually contribute a little bit of time in the background to maybe improve the production of these videos, because I keep them so simple and it's just me talking into a microphone and just sharing my screen. And maybe I will start showing my face a little bit more, we'll see, going forward, but I'll do some editing, things like that, to improve the viewing experience. So welcome again. The only thing I ask of you guys is just please click the like button to support the channel. I'm not trying to sell you guys anything. I'm just showing you exactly what I'm doing with this portfolio, which is about 15% of my current net worth. My other investments are really just in boring ETFs, boring but yet effective. And the reason for this portfolio is to generate income, because in retirement I'd like to live off of dividends and interest and not have to sell shares of my investments. That way I don't have to worry about the timing of when I step away from work. If I have enough dividend paying stocks to pay for all of my expenses, I'm set. And I know there's something called a sequence of returns risk, and I think if you live off of dividends and interest, it really eliminates that, at least in my opinion. Of course, with my other investments, I will have to sell shares, or I probably should. Otherwise, it's just going to go up and up and up, and I'm not going to enjoy the fruits of my hard work and labor of my investment. So what we're looking at right now is my taxable average Joe dividends portfolio, which is at M1. And I like to show these videos through M1 because it's easy to show things without exposing too much information about myself. And we can see the 3-month return. And of course, when you're investing in dividend paying stocks, it's really hard to do better than the S&P 500. So if you're just starting out, I would look at that as an option first and not even worry about the dividends. Try to grow, a nice nest egg, and maybe worry about the dividends a little bit later when income will become more of a priority as you get closer to retirement. But we can see though over the last 3 months, like the market, we've gone up about 7%. The last year, we'll click on that. We've gone up a nice 14.94%, so almost 15%. And we'll go to view benchmarks. So I'll show you what I mean. This portfolio is going to lag the S&P, but I'll show you why I'm okay with that. This is 15% of my current net worth, and the purpose of this is right here, is in the dividend yield. You can see what this portfolio yields, 5.36%, and something like a VT, which is a total world stock market index. Let's maybe put something else in there. Maybe we can clear out VT or AOR, and we'll put in, I'll show you like a VTI. There we go. We'll put VTI, and that will show you kind of the difference of the growth you're going to expect with you can see, well, I guess they're about the same-ish. Actually, I'm shocked that the world VT is outpacing VTI the 1 year, but it looks like they match pretty close. But you can see though we're trading income here for yield, or we're for yield in essence. But I own plenty of VTI to kind of cover the growth in there. So I just wanted to point that out. And I know the trade-off that I have here with this portfolio, and that's where this gives me peace of mind for income and growing income as well. We'll get more into that a little bit. But let's go into the activity log. And what I did was, here's the $250 deposit. Again, I'm going to do a single one per week of $250 per week, so about $1,000 per week. Depending if there's 5 Mondays, then I would have, of course, $1,250 in deposits for some months. So, and I'll show you what I've done is, in this case, on Mondays, what I'm doing is I'm using Auto Invest. And I have Auto Invest toggled. And what that means is the money that goes into this portfolio is going to go into the underweighted portion of that this portfolio. We can see we're right where we're supposed to be from the actual and target. And these are percentages that I've set. So we're okay here. We're overweighted because the actual in the 10 more dividend slice is 9.1. And we're underweighted here in the ETFs. And the portion that's underweighted right now is BST by 0.2%. And it's still underweighted after the $250. So we know where the money went, and that's based upon the weightings. And I think I'm going to do this for next Monday as well, because I want to kind of, balance the portfolio out a little bit. So here's that one buy. The $250 went all into BST. I don't have a problem with this because of BST's dividend that paid. That was over $500 just last week. That did not go back into BST. It went into other positions. So kind of getting the shares back, so to speak, that I would have acquired if I just would have dripped it back into BST. But I want to kind of spread that wealth of that dividend because BST and SCHD pay the bulk of the dividends within this portfolio. So the 250, that bought 6.28236 shares of BST, and BST pays a monthly dividend of an even 25 cents. So the simple math is to take this quantity times 25 cents, and that will be the increase of my dividends every single month. So we're going to update my Google Docs spreadsheet in just a little bit. And it's only going to change the values of BST. So we're going to concentrate on BST. And here it is. It's highlighted in blue because it's a monthly pair. Here's the current share price we bought into. Here's the average share price that I've purchased BST at. Here's the number of shares at over 2,126. So we're going to be adding the 6 additional shares there plus. Here's my cost basis. Here's my gain or loss. That's including the dividend. But here's my gain or loss as a percentage. It's in the green because it's above 25%. And then here again, here's that dividend. It's monthly, so it's 25 cents. Here's that yield, very high yield. And it uses, BST is a closed-end fund that uses a covered call strategy to generate income, essentially. And then here's the yield on my cost, close to 10% there. Here's the next pay date, and then here's the next dividend. I put in the next dividend over here because we're going to see it go up because we bought 6+ more shares. And then here is the total dividends. You can see like historically what it's paid. You can see my very first dividend from BST was 61 cents. And then it's gone up ever since. The last dividend was $530.41. And so I'm going to get at least this, but it's going to go up even more because of the buy that we had. And also what's going to change on this sheet is my cash flow average, monthly, quarterly, and annual. So these are like a monthly paycheck, a quarterly paycheck, and an annual paycheck from just this portfolio. And so what we're going to do is we're going to grab that data from M1. We're going to update this sheet. We go to the M1 data tab. And what it's going to do is it's going to grab 3 sets of information. And that is the number of shares. It's going to have the new shares. You see that VLOOKUP in the M1 data tab. My cost basis, which will change as well. And there's 3 of them. The average share price. So the average share price, number of shares, and the cost basis. Those 3 sets of data are going to change for BST. And what I do is I go back to M1. I go to the Holdings tab. And if you're curious to see what's all in this portfolio, I'll leave a link below. And I start with the name column and just do a copy. I could probably just end it right here with this copy. Let's try it. We'll see if it messes up my data, because we're really only after right here those three pieces of information. So I don't have to type it in. Normally I buy more shares of not just one, but multiple. It could be 7 to 10 different companies at once. And so I developed this so I didn't have to type that in all the time. So today it's less impressive because it's only 3 sets of data, but still I don't have to type those in. So let's see if it worked. So we'll go back to the dividend portfolio tab, and hopefully we have the right information. Let's see if it went up. It looks like it did. So we don't have any errors in this at all. It imported the data correctly. So we have the new average cost per share, the new number of shares, as well as the cost basis. So we'll see what the new dividend is going to be. So we're going to move from the old dividend that was $531.69 to now the new dividend, and this will be effective at the end of September. So I don't have to wait till the end of October. I think the ex-dividend date is usually in the middle of the month. So we're good for almost another week for BST. So moving to 533.26 there. And of course, since we moved the dividend for this monthly payer, it's also changed the monthly cash flow average. And it's now we're up to $1,099.70. And then for monthly, almost at $1,100. And then quarterly moved to $3299.10. And then annual moved up to $13,196.42. So we're going to take that monthly cash flow average, the $1,099.70, and we're going to go to my monthly average dividend tracking tab. So we're going to $1,099.70. We'll type this in. Anytime I have an event like a buy, sell, dividend increase, dividend decrease, I do a drip, anything like that, I put it over here. So the $1,099.70. That's new. The old, we started with $1,098.13. And so the $250 deposit buying BST, that added an additional $1.57 every single month going forward for this portfolio. So you can look at it as like I'm buying I get a free pound of apples every single month. That's something I don't have to buy then going forward, or whatever bill it is, kind of apply it. So you can see other things that happen with the portfolio. I had good news on the 5th, which was Friday. Verizon had a 2% dividend increase, no surprise. That added 39 cents of additional monthly income to the portfolio. You can see other events like dividend drips with a deposit dividend drip. Sometimes it's just a deposit, or we have dividend increases. But you can see how those 3 events will move our next dividend for the month up, and it keeps going up and up and up. So tomorrow I'll have another event with Southern is going to pay its dividend, and we'll look that up. We'll verify that dividend. You can see here everything's arranged here on this sheet by the pay date. And we can see Southern right here on September 9th. It's a 1-day delay. Technically, Southern pays today, but it doesn't go into my account because there's a 1-day delay with M1. A lot of brokerages are like that. So we can see here's the last dividend was $7.72, and I think it's going to be $8.10 unless we bought after the ex-dividend date. Let's go look that up real quick. Go to portfolio, and Southern is in the dividend portfolio slice there, and I don't own it's like 1%. Yeah, it's my allocation, so it's near the bottom there. And then I will go to a 1-month view, and that shows you the dividend, your next dividends earned $8.10. So that is confirmed. That is what I'll wake up to in the morning, not 8.70, 8.10. And then what I do is I put a plus, and then plus $8.10. So we have kind of a rolling history of that. You can see from the 772 is the last one, now up to 810. And then the next one after that in 3 months, which will be in December, probably about December 9th, right around there, I'm going to be getting at least 810. It's going to be more than that because I'm going to drip this dividend from Southern back into Southern and buy more Southern. So it's going to be like 815, 814, something like that. But you can see how the dividends are just going to keep on increasing. So let's do a count up. We're going to put that 65.96 right here. We're going to go back to this in a second, but there's a couple pieces I wanted to update. There were two companies. Remember, I told you the pay date. I arranged this from A to Z, so it's from oldest to newest. And so when Coca-Cola paid their dividend on July 2nd, doesn't mean they're done. And I just received the 1207, or actually, I received 1183. The next one's going to be 1207. So what I do is, like every week, I'll look up the top ones, like Coca-Cola ADP, and see, hey, have they announced a new dividend pay date? And before the video, I looked up Coke and ADP, and they indeed do have new dividend pay dates. And of course, these will all have one. Most are just 3 months. 3 months later. So dividend pay date October 1st. So I'm going to put 10/2 because of the 1 day delay there. So Coca-Cola's next dividend is 10/2/25. And same with ADP. Theirs is going to change as well. I looked them up, and they have a new dividend pay date out there. And then there's same dividend pay date. It'll be 10/2. So again, I'm adding that 1 day. 10/2, because that's when it's going to show up. I'm going to have these dividends, the 1698 will show up on October 2nd. I'm going to do a sort, and you saw the Coke and ADP jump out of there because now they're here. They're in the 10/2s. You can see that in 10/3 I'll receive NVIDIA at a whole 48 cents. But these right here, all these July pairs, they're going to become October pairs. And they'll be down here. And then I'll have my 2 monthly pairs, BST and O, will also become a part of the October pairs, and the November, December for O and BST. So I've done that. Let's go to the dividend tracker tab. And you can see some history on this dividend portfolio when it was at $1,300. The dividends paid. And my very first dividend from the portfolio was March 2019. Looks like, at least when I was tracking it, 784. We're going to go to where we are now, September 2025. And this is the portfolio value rounded to, I round it down to the nearest $100. Here are the dividends received so far in September. September is the big paying month. Every March, June, September, December, those are where most of my companies are paying their dividend. And here's the average monthly dividend. This is the monthly paycheck on average that this portfolio is generating. And just in the month of September 2025, I've increased my average monthly dividend by $3.04. Of course, that's with dividend drips, deposits, and dividend increases, and with Verizon being the last one. So I've had a month-over-month gain in my average monthly dividend of 0.28% so far, and we're just started September. Here's my annual dividends, annual paycheck, $13,196.42, and I've increased the annual dividends in the month of September alone by $36.50, and we're going to add that $2.50, so we're at $4.50. Again, we're going to be a little bit higher on the deposits. So the low is going to be $1,000, and then $12.50 should be the high. Going forward, again, it'll just be one video per week just to kind of save me some time, but you'll see bigger moves as a result with bigger buys. So let's close out the video here. We're going to go to my total net worth statement again. The dividend portfolio it's on this line right here. That's the 15% I was talking about. Let's go over the rest of it. And over at Vanguard, I have an IRA, traditional Roth, and then a little bit of money left over in a money market fund. So right there at Vanguard, I have $322K approximately over there at Vanguard. Here's my current employer 401K. I have just one fund. It's a Fidelity S&P 500 index fund. It's a very low fee fund, and I like the performance of the S&P. It's a good 8, 9, 10% on average annually. Of course, you can have bad years, you can have good years, you can have flat years. You just don't know. But over time, the S&P has returned about 8, 9%. And if you include, I think it's about 7%-ish around there if you include inflation into that number. And here at M1, I have another IRA, traditional IRA. and that's valued at 766K. Again, here's the taxable brokerage account M1. Here's my M1 savings. It's going to be a little bit lower because that 250, I don't think I subtracted that out, but I will do that. But I also put the average monthly dividend for my other investments as well, including 401k. And remember the 1,099.70, that's right there. And then there's like the interest off of this savings account here. And then over at Synchrony, this is my emergency fund. You can see what that will generate monthly. And then over at Capital One, I usually don't like to keep more than $10,000 over there. I have a little bit more because I'm having a fence installed and I'm going to pay that cash. It's going to be around 6,000, so about 6,000 is going to come off of this. And then once I get above the 10,000 mark, I'll start pushing more money over to Synchrony. And here's my home value, all paid off, no more mortgage. And then here is my credit card balance over here. This is for half of the fence and some other expenses. This will accumulate, and then I will pay it off as it gets close to the due date, so I don't have to pay any interest. So here's my total net worth right here, the 1.9. And then here's my average monthly dividends from all sources, IRA, 401k, and savings account interest. So I could just draw dividends and interest and not have to sell any shares or pull any cash and live off of that. That would be nice. We'll see though. I may live off of the 4% rule, and that's calculated here minus my home value. Can't count that in the 4% rule at all. And all a paid off house really does is just reduce your housing expenses. It doesn't generate any money for me because I don't rent out any rooms or anything like that. Here's the breakdown of my net worth in stocks, home equity, and cash. The home equity portion definitely went up as I sold a little bit of stock to pay off. So it's kind of a switcheroo a little bit with that money. And then here's the breakdown in pre-tax and after-tax. A lot of people get stuck in what I call the middle class trap, where everyone has all their money wrapped up to their house or their 401k, and you really can't do anything with that. You suppose you could sell your house, but you gotta live somewhere, and I suppose you could take a loan out of your 401k or liquidate it, but it's not recommended. So I recommend you have something that's after tax. It gives you kind of more options, to sell. Like I could technically, use this to help out an emergency, but I want to burn this first before burning this, because by spending cash, there's no tax implications on it. The only implication would be maybe less interest I receive in the following month in that. I wouldn't have a tax burden with spending cash. So that's why you want to have plenty of cash, maybe not too much, but everyone's needs are different. For me, since I own a home, I like to carry a lot of cash. I also kind of self-insure a little bit. I pay higher deductibles on my cars, just to kind of keep my monthly costs down. So here's the breakdown, US and international. So that's all I had to show you guys for the video. It was pretty simple what happened today. $250 deposit, one buy, went all into BST, which is it's a high yielding closed-end fund that uses a covered call strategy to generate income. BST bought over 6 shares of it with the $250, and that was based upon my allocations and with it being underweighted. With BST being underweighted. So with me buying this, I'm not trying to tell you, hey, this is a good time to buy BST. That's not the case at all. It just happened to be underweighted in my portfolio at this time. And I like to see different things underweighted, so I'm not just buying the same thing over and over. If that did occur, I would probably have to take a close look at it and see maybe if there's an issue. Maybe something is crashing for a reason. Maybe the dividends were cut for a company and they're crashing, they've been slashed in half. Maybe that's not what I want to do. And actually that's not, if that did happen, I would cut them immediately out of the portfolio, because that's one of my strategies you can see right here on this sheet. And you can look at my strategy, which I've changed to $250 Monday buy. You can see dividends are reinvested, except for BST and SCHD, which are reinvested into the whole portfolio so they can go anywhere. I'm a buy and hold investor. If you're looking for someone for quick stock picks, I'm not that person. I'm a long-term buy and hold investor. And what I want to do eventually is the ones that pay $25, I'm probably going to do the same thing that I'm doing with BST and SCHD, which is to just drip into the entire portfolio. Like for instance, Black Hills. In time, Black Hills at 28.81, it wouldn't necessarily drip back into Black Hills. It would go into the underweighted portion of the portfolio. But I like to see more positions that are above that $25 mark. You can see I have some with Prudential and SCHD, and that one's well above. Same with BST, but there's not a whole bunch. There's Verizon with AbbVie in there. But I'd like to get some, more and more of these. I think Pepsi's pretty close to getting to that range. Oh, it's above. So Pepsi's a new one. But as this portfolio gets bigger and some of these, like Fifth Third is getting closer, above that 25, I'll start pushing those to 25 and above to auto invest in the portfolio. So that's all I had to show you guys for the video. If you got value from the video, please click the like button. Also subscribe so you do not miss future videos. Thanks everyone for watching this video, and I hope everyone has a great week. Everyone take care.